as the markets rise, it eases monetary conditions, which is the one thing the Fed is trying to tighten in order to quell inflation, slow economic growth, and raise unemployment to make sure that the inflation boogeyman is dead. But here's what you need to know before the bell this morning. The market has had 2 days of decline. Now, this is hard to believe here after such a stretch in the markets where markets were just literally rising every single day. But again, we've talked about this before, is that we have these buying and selling stampedes, and right now that buying stampede had gotten very long in the tooth, so we're having a little bit of a pullback here. Again, the question is will it continue? Now, futures are looking to open a little bit weaker this morning, not surprising ahead of whatever the Fed might say. But we are starting to kind of maybe begin that work of that consolidation or corrective process that will bring prices back down towards at least the 20-day moving average right now, which is right now that's around 42.60 on the S&P 500. So that's not a big correction, right? That's about 2-3%, but that'll help ease up a little bit of this overbought condition that is in the markets right now. And again, we're kind of looking for the market to rotate here a little bit. Basically technology, communications, discretionary sell off here a little bit, get a bit of rotation into some of the other sectors like staples and real estate and utilities, et cetera. Those areas of the market that are a little bit more defensive, maybe pick up a little bit of rotational cash flow over the course of the next few days. And that, again, and as we said yesterday, that wouldn't be surprising at all heading into the end of the month, because a lot of mutual funds, pension funds, et cetera, that manage money and they have balanced allocations, they're going to have to sell some of the high flyer stuff, buy some of the stuff that's not been performing as well to bring their allocation weights in their portfolios kind of back towards model weight. That's kind of what happens at the end of each quarter. They do this rebalancing. So we could see a little bit of rotation here within the markets, as well as a bit of a pullback just because of just the selling pressure, particularly in those bigger tech names like Microsoft, Apple, Google, Tesla, et cetera. Now, those stocks, of course, have been very resilient this year. And, we keep kind of expecting pullback. They haven't yet. Doesn't mean they won't. They just haven't yet. But again, kind of keep a watch on this market here. It looks like we may have temporarily started this corrective process. We're still on a buy signal, though. So again, the price momentum is still there to keep prices elevated. We haven't triggered a sell signal, but if the next couple of days, and this can happen fairly quickly, if the market kind of dissolves over the next day or two, gives us that kind of short-term corrective pullback, we could trigger that sell signal from a decently high level, and that would suggest a continuation of this corrective process at least over the next week or two, which would give you, as we said before, that would give you a much better opportunity to allocate some money to the markets. Remember, a 5 to 10% correction with any given year of the market is certainly well within norms. So keep a watch on this. Keep a little bit of dry powder here. I think you'll get a better opportunity to put it to work. But that's what you need to know before the bell.